Good morning. I'm Peter Milios from the Finance News Network. The Dow Jones Industrial Average lost more than 200 points as investors worried around First Republic overpowered their excitement around big tech earnings. The blue chip index declined 0.68% after trading at more than 100 points earlier in the session. The technology-heavy Nasdaq Composite added 0.47%, trimming gains after jumping as much as 1.4%. The S&P 500 slid 0.38%. First Republic Bank slid more than 33%, extending losses after falling almost 50% on Tuesday. The regional bank said late Monday that its deposits dropped 40% to $104.5 billion in the first quarter. Investors are worried about the cost of the bank's funding. It borrowed about $92 billion from the Federal Reserve and government-backed lending groups, like Federal Home Loan Banks. The problem is that these loans come at a higher cost than customer deposits, and the bank is unable to use the funds to do business as it could with customer deposits. In tech news, Microsoft climbed more than 7% to trade at its highest point in more than a year after beating Wall Street's expectations on the top and bottom lines in its latest quarter. However, Britain's mergers regulator today blocked Microsoft's $69 billion takeover bid for Activision Blizzard, ruling that buying the maker of Call of Duty would give the tech giant too much control of thriving market for cloud-based video games. And in aftermarket trading, Meta's stock has jumped nearly 10% on revenue beat and better than expected forecasts. The company issues revenue for the first quarter that topped estimates and provided optimistic guidance for the current period. Amazon rose more than 2% as some market participants grew hopeful that the e-commerce giant's cloud business could also show strong revenue growth. Elsewhere, Chipotle's shares jumped more than 13% to an all-time high on the back of strong earnings. And it looks like the SPAC boom is over. While the special purpose acquisition companies took hundreds of risky companies to the stock market, the next stop for many is bankruptcy court. Dozens of companies that merge with SPACs are running out of cash, joining at least 12 that have already gone bankrupt. More than 100 companies are running out of cash, according to a Wall Street Journal analysis of companies' cash and cash flow from operations data disclosed in regulatory filings. Shares of many of these companies trade under $1, more than 90% below where they did when they went public, and are in danger of being delisted. Those that have raised cash typically have done it on onerous terms. Overnight, all S&P 500 sectors finished lower except tech, off the back of positive results from the sector's bellwethers, whilst utilities lagged behind. The SPY futures are pointing to a 0.3% fall. Thank you for listening.